Hello and welcome back to the Geordie Pig Investor channel, where we delve into the world of dividend investing to help you build a portfolio that pays you. Whether you're just starting out or looking to maximize your passive income, this channel is your go-to resource for strategies, insights, and the tools you need to grow your wealth steadily over time. Hit that subscribe button and join me as we explore how to make your money work for you, one dividend at a time. In today's video, we are going to have a look at, is BAE Systems stock a buy right now in 2025 after a recent dip in the share price? What is BAE Systems, stock ticker BA? It is a British multinational defence, security and aerospace company. It is one of the world's largest defensive contractors, specialising in advanced technology solutions for military, intelligence and civilian applications. The company develops and manufactures fighter jets, submarines, warships, cybersecurity solutions and advanced electronics for defence forces worldwide. Some key stats to do with BAE Systems: they are based in the United Kingdom, have a market cap of 39.94 billion. They are in the industrials industry. They went public in 1981, have over 90,000 current employees, have a growth streak at 8 years with a dividend yield sitting at 2.58% and a 5-year dividend growth rate at 6.46%. Over the last 3 months, the stock is down 13.1% as shown on the graph below. And in today's video, we are going to have a look into if the stock is a buy, hold or sell. BAE Systems earnings call and fundamental analysis. BAE Systems has recently reported strong financial performance driven by increased global defence spending amid heightened geopolitical tensions. In their latest earnings call, the company highlighted double-digit growth in both sales and earnings before interest after tax, EBIT. The company is confident in meeting its annual guidance of 12% to 14% earnings growth for the year, supported by a robust order book that includes fighter jets, submarines and weapon systems. BAE Systems anticipates further expansion in its order book, reflecting ongoing demand for defence capabilities. Geographically, BAE Systems generates over 40% of its sales from the US market and continues to see growth opportunities there. Additionally, the company expects increased defence spending in the UK, Europe, the Middle East and the Asia Pacific regions. Recent contract wins include orders for artillery, Bradley fighting vehicles and armoured vehicles, further bolstering the company's position in the defence sector. CEO Charles Woodburn emphasises the company's focus on operational excellence, contracting discipline and workforce growth to consistently deliver critical capabilities and technologies to consumers worldwide. Overall, BAE Systems' strong financial performance and strategic initiatives position the company well for continued growth in the evolving global defence landscape. Some key fundamental analysis on this company is they have a positive free cash flow currently at 2 billion, positive net income currently sitting at 1.8 billion, positive operating income at 2.4 billion, positive gross profit at 15 billion, positive ROE at 17%, solid short and long-term solvency. They have a very low debt to equity currently at 0.54, an average Altman Z-score at 2.42, average interest coverage at 5.75, and they do have a positive net debt currently at 1.9 billion, but that is nothing unheard of for a company in this sector. Next up, we're going to have a look at BAE Systems free cash flow. Free cash flow is the money a company has left over after paying for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow has a massive impact on the direction a company may be heading, because if it has negative free cash flow, this is not a very good look and could look like the company is heading for some troubles. From the graph, you can see that BAE Systems free cash flow has fluctuated over the past decade, but has generally trended upwards, particularly in recent years. From 2014 to 2015, FCF was relatively stable, but did end up decreasing. This could be due to increased capital expenditures or lower cash inflows from contracts. Since then, it has seen a great increase due to many different reasons. One being the geopolitical uncertainty, such as the war currently that's in Russia and Ukraine, and it has led to higher military spending, as well as BAE securing large long-term contracts from the UK, US and European governments. They have also improved cash management and efficiency in their manufacturing, which has led to boosted profitability, and despite paying dividends and reinvesting in R&D, BAE has maintained strong free cash flow growth. Their current FCF payout ratio only sits at 31%, which is a great sign because this means that they should be able to continue growing that dividend over the coming years. BAE Systems discounted cash flow valuation. DCF is a method of estimating the current value of a company based on projected future cash flows adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flows based on selected operating models. Their current price is 1,197 GBX, and with a 8.5% discount rate with a negative growth rate of 3.1%, you can see they were valued at 881.82 GBX. With a discount rate at 8.1% and a terminal growth rate at 0%, you can see the company was valued at 1,356 GBX. And with a discounted rate of 7.7% with a terminal growth rate at plus 3.1%, they were valued at 2,569 GBX. Next up, we're going to have a look at the relative valuation. Relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it uses includes EV to revenue, EV to EBITDA, and PE ratios. When plugging in my numbers for BAE Systems, their relative valuation on the worst case scenario was valued at 1,654 GBX, on the base case scenario being worth 1,885 GBX, and on the best case scenario being valued at 2,057 GBX. Now that we have both the DCF valuation and the relative valuation, we can come up with something called the intrinsic value. The intrinsic value of a stock has been used for many years to calculate stocks and is easily calculated by simply adding the two together and then dividing by 2. On the worst case scenario, their intrinsic value is 1,267 GBX, average case being 1,620 GBX, and on the best case being 2,313 GBX. I not only look at these methods, but I look at one further method to solidify my valuations for a company, and that is the Wall Street estimates. The Wall Street estimates are an average estimate of a public company's quarterly earnings and revenues that leads to a valuation of that company. These numbers are forecasted by a company-specific analyst who provides research on that particular company and therefore comes with what they believe is an accurate valuation. There are multiple analysts for companies the size of BAE Systems that will be looking into them every single day to come up with these valuations, hence why I like to include them in my own personal valuation of a company. On the charts, you can see that the three different forecasted prices for BAE Systems, the worst being 1,252 GBX, which is actually a 5% upside on that current price. The average one being 1,484 GBX, which is a 24% upside in the current price. And the best case scenario being 1,785 GBX, which is a 49% upside on that current price. So, overall, BAE Systems, as I mentioned before, is worth £11.97. And now that we have all of our three valuations, we can come up with the final best, average and worst case scenarios for BAE Systems. On the worst case, they're valued at £12.62. So with a 10% margin of safety on the worst case price, you'd be looking to buy the stock at £11.36. And with a 20% margin of safety on the worst case price, you'd be looking to buy the stock at £10.10. On the average case, they were valued at £15.75. So with a 10% margin of safety on this price, you'd be looking to buy BAE Systems at £14.17. And with a 20% margin of safety on the average case price, you'd be looking to buy the stock at £12.59. And on the best case scenario, we can see BAE Systems would be worth £21.37. So with a 10% margin of safety on the best case price, you'd be looking to buy the stock at £19.23. And with a 20% margin of safety on the best case price, you'd be looking to buy the stock at £17.09. What does this mean for BAE Systems? Is the stock a buy right now? BAE Systems has a large, well-diversified order book securing consistent cash flow. It has key contracts for fighter jets, warships, submarines, and cybersecurity solutions, providing long-term revenue visibility alongside its strong free cash flow, which supports dividend payments and share buybacks. It has a nicely growing dividend yield that's currently seen an increase for 8 years in a row, and it is well covered by its earnings. And the ever-rising defence budgets in Europe and Asia are creating new growth opportunities for BAE Systems, and it is diversifying into cybersecurity, AI-driven defence systems, and space technology. These are all high-growth sectors with strong future demand. It's important to consider that most of BAE Systems comes from government contracts, so if defence budgets are cut, future earnings could be impacted, and although stable, BAE Systems isn't a high-growth company like tech stocks, so you can expect steady growth, not explosive. Having considered all of these factors, I do think that right now BAE Systems is at a very attractive price, and especially if you are a UK investor, because the long-term benefits of having this within an ISA account are going to be so beneficial and one that could reward you over the long term. Do you currently own this stock in your portfolio? let me know in the comment section down below. Thanks for watching. If you're building a portfolio for passive income and financial freedom, don't forget to like, subscribe, and hit the bell notification so you never miss an update. Until next time, keep compounding and stay patient in the market because your future self will thank you. For now, this is the Geordie Pig Investor, over and out.